Hi, folks. Dan Bird here with the Daily Scan, brought to you by BreakpointTrading.net. Today is Wednesday, the day before Thanksgiving, November 27th. And today we had the PCE, which is the Fed's preferred inflation measure, and it came in as expected. So not hotter, not cooler, pretty much as expected. And the market, I think, reflected that today. So we'll take a look at it here in a second. For those that are interested, if you would like to join the website as an annual subscriber, we have a Black Friday special going on. So this is for new subscribers only. Just click on the link on the homepage, which I'll show you in a minute, and go down to where it says coupon code and enter in Rally, R-A-L-L-Y. Just a quick disclaimer, I am not a financial advisor. I cannot give you recommendations on what to buy or sell or when to buy or sell. Each individual has to understand their own risk profile and their trading style and make their own decisions. If you do decide to engage with a financial advisor, I recommend you go to this website, Investor.gov, and make sure that they are reliable. So let's go to the homepage real quick, and we can see the market bias is just basically sitting there a little bit higher, but going sideways. But the overall market is still still has a green light, so that's good. This is where you can click on this link to sign up for the Black Friday special if you're interested. We'll take a quick look at the NASDAQ right here. So NASDAQ pulled back a little bit today, but still just above the support line. S&P pull back very slightly, not really very much. Basically just treading water right now. It's sitting right at the highs. So it's below 6,000, so a little below the high. So it looks like it's running into a little bit of resistance right there. And we'll see if it can finally break through. And Bitcoin, somebody asked me to talk about Bitcoin. Bitcoin did not make the breakout to 100,000 yet. Today, it went to a low of 91.7 and closed at 96.3. So you can see that candle right there. It had a nice little recovery today. This is the support line that I talked about before. It's right basically in the middle of this congestion area, consolidation. And I said it probably would come down near there and that the 21-day would come up to that line. And that's exactly what's happened. It didn't really quite get to it, and it looks like it's starting to reverse. So maybe it's going to go up and hit 100,000 by Friday. You never know. Day after Thanksgiving. By the way, the market is only open half a day on Friday, so it'll be a shortened market. And normally that means most of the big traders are probably taking the day off. There will be lots of volatility and low volume, typically, on the day after Thanksgiving. So high volatility means the market could get pushed around. Either way, could get pushed higher and it could get pushed lower. So I wouldn't necessarily use Friday as an indication of where things are going, but we'll see what happens. All right, the dollar. Let's take a look at that real quick. Dollar's pulling back. Had a really nice run. Now it's coming back down, getting close to the 21-day moving average. Gold is pulling back as well. Bonds are starting to move higher. So, and the 10-year yield, I talked about this yesterday or the day before, that the 10-year yield had been going sideways, which is kind of what I expected it to do. And now it's starting to fall significantly. So it's coming right down to its 50-day moving average. That's the pink line right there. That's the area where if it falls through that, it probably will continue to fall, or it could bounce from there. But I think it's probably going to go sideways or slightly down. So right now that is looking pretty good. And of course, we have the Fed meeting coming up later in December, where they probably will cut rates again. All right. So before I get to the daily scan, a couple of things that folks had asked me about. One was, and I'll use this chart right here. One was I want to go back to something that a subscriber mentioned a couple of days ago, and I talked about Asan. he asked me about this and said that he thought it would potentially go to 20. He bought it down here, actually right down here when the 21 crossed the 50. So had a nice gain. I said a good place for a stop would be right about here. So you can see it pulled back to just above that and then started back higher again. So we'll have to see if that's going to continue. But the one thing that he said that I forgot to show was that the Keltner channels, it was extended in the Keltner channels. And I've talked about these before, and I'll do it on a Technical Tuesday at some point. But one of my buttons here is the Keltner channel. And you can see right here, I got to the 4X area. So these basically are the average true range, the average range that a stock travels in one day, on a daily chart. The green is 1 day. The blue is 2 times the average range. The red is 3 times the average range. And when it gets above that, that's 4 times. And it very rarely gets there. And it gets there. And when it does, it doesn't stay very long. So that's exactly what happened. Just he had pointed out. Here's the support line that I mentioned. Usually stocks will pull back to reversion to the mean back close to the 21 day, like it did there. It hasn't really been in the 4X area very often. It got there right here, pull back to just above the 21. So if it does that again, that means it will pull back to around 1425, 1450. But we'll see what happens. But I wanted to point that out because he did mention on one of his criteria that was that it was above the 3X. It was in the 4X area. That's something you should always watch because that usually means just be prepared that it's probably going to pull back when it gets to that area or it's going to take off. So you can notice down here when it got down to the 3X on the bottom side, it reversed and went back, reversion to the mean, came back to the 2X, went above the 21, came back to the 1X, and then took off. So that's something that can be really useful. I'll cover this in more detail at some point in the future. Okay, another chart someone asked me about was, let's go back to the default, was Airbnb. So Airbnb is right here. They said that it looked like it was starting to recover, and it does look that way. However, one thing that I'm always concerned about is this 200-day moving average. You can see that dashed gray line right there. It's actually shaded below it. So it's been below its 200-day moving average. This is the area that most big traders will identify with and usually won't even consider a stock if it's below the 200-day. And that's where this is right now. The accumulation distribution just started moving up. However, if we take a step back and look at a 1 year, again, there's the 200-day right there, but look at the downtrend. So we just draw a line across these right here. Then you can see that it has finally broken out of that downtrend, but it's been in a long-term downtrend for quite a while. So it looks like it's trying to recover and get into a rally, but it really needs to prove itself and get back above this 200-day and stay there. It's above the cloud, which is good. It's above the 50, which is good, but it needs to really get above this 200-day. And if we also look at this on a 3-year chart, right there again, you can see the long-term downtrend, but even since just this year, there's the downtrend for this year. And I always like to take a step back and look at a weekly chart also, because sometimes it can give you hints from a broader perspective. And on the weekly chart, it's still below the cloud. It's below the 50-week moving average, which is the same as the 200-day. So it's below that. So from a weekly perspective, a longer term perspective, it still looks pretty weak. Still has some work to do. So it needs to, this is the force indicator. I'll cover that at some point in the future, something that I put on most of my charts. It needs to get above that as well. So it's still trying. It's trying to make that rally, but it's got a long way to go still, I think. All right, another one was, and this was a really interesting comment. Let me go back to this. We've talked about the small caps, And here's the Russell 2000 small caps. Tried to make a breakout here, pulled back. There's the shooting star candle, what I talked about on TNA. So TNA will look pretty much just like this. TNA is the 3x. It looks pretty much identical, which it should, because it follows the Russell 2000, but it gives 3 times the return. So I got out anytime I see a shooting star candle, especially when it's at resistance. That means it's failed. It's a failed breakout. Pull back, but it's just sitting there going sideways right now. So I got out at 56, a little above 56, wherever that close was. Close was 56.25, and I got out literally with like 10 seconds left of the day. So it's staying a little below that. What I'm thinking I'm going to do is put in a buy order. Now this will be a buy stop order, a little above that. So I got out at 56.25, and the high that day was 58. So I might put something in at about 57. So the high on this day was 57.07. So looks like it's trying to break out. Maybe I'll put it a little above 57. And then if it does start to make a breakout, might actually even put it at 58 up here on TNA. And if it does start to make a breakout, then I can participate as it breaks out above the previous high. But if it doesn't, my order just won't execute. It'll just sit there waiting. So this is 58.34, and the high that day was 58 exactly. So I might put something in right around there. And then at least I'll participate if it does break out. And if it doesn't and continues to go down, which it may, especially on Friday, anything can happen. Could go either way Friday. And it will not, Friday will not tell you what the direction will be. So keep that in mind. But anyway, that's TNA. And let me go back to the IWM, because the comment that this person made was there could be a long-term cup and handle. And for that, I'm going to go back to, I'll start with a 3-year. You can see this is a 3-year chart. So way back here, this is in 22. This was the bear market. Went sideways through all of 23. In October of 23, which was the bottom, it started, small cap started to make a move. And then when the Fed cut rates right here, it really took off. But it's been an upward trend. You can see the higher highs and higher lows. That's what we want. But there's a potential that it could come back, because it might make another higher high if it comes back near the 21 like it has these other times. So that's very possible that that could happen. Now, this is a weekly chart. Keep that in mind, and the week hasn't finished yet. So Friday, there'll be a little bit more added to this. It'll either be higher or lower, depending on what happens. Now, let's take it back a little further. Let's go back 5 years, because the comment was it could be a long-term cup getting ready to form a handle, and you can clearly see the cup right there. So this is a pattern that Investors Business Daily loves to talk about. So if I put a cup right here, you can see right there, there's the cup. And this is all the way back from November high of 2023. And if we put a horizontal line at this high right here, puts us, it's actually broken out above that. So normally with a cup and handle, and this also is an opportunity to explain technical analysis as well. So what happens when there's resistance is all the people that bought all the way through, all the way back here, then it went sideways and then started moving higher again, and everyone thought it's going to break out and go to the moon. Everyone bought in this area. So everyone that bought over here, as it started to decline, and if they didn't have stops in, you can see where the 21 and 50 crossed right there. This is the long-term trend. So it changed from green to red right there. 22 was a long bear market. If people didn't have stops in right there and followed it all the way down, they're just waiting for it to get back up here so they can break even. That's what they want. They want to just break even. Now, and that's a handle for the cup. Now that handle could very well be right here. So they didn't even wait for it to get all the way back up. They started selling right through here. And if that is the case, these things are never exact. So if the handle was right there, then there's the breakout, basically 4 weeks ago. And normally when it breaks out like that, that's a continuation pattern. Very oftentimes it will pull back to that support line, which it actually did 3 weeks ago. So we'll have to see if it pulls back again. If it does pull back again, I think that probably will be the final one. And if that happens in the next either Friday or next week, I don't think it'll be Friday, but if it happens next week, if next week is a down week and this pulls back a little bit, then I think that's going to be setting up for the end of your rally. And this might be just a springboard for it to go higher. You can see the force indicator down here as well. Right here, that's the buy signal. This is a long-term chart, remember. Here's the sell signal. So the sell signal was back here in November. You can see just before this change to red. So that would be the time to get out. There was a brief one right here when it went above the cloud. But really the key one is right back here. And you can always wait a little while just to make sure, wait till it gets above the 200 and the 50 and the 21. And all of those are gathering right here. So you could wait another week or so, but you can see it's just been nothing but up ever since then. So it was basically right after the low in 23, the end of October, and it's just continued higher. So this could be that's a very astute for the person that mentioned that. This is a long-term cup, might have already created the handle right here. And now might have a pullback, which often happens. So this would have been the cup right here, and there's the handle. So oftentimes, anytime there's a breakout, it often will pull back and test that support. And if it does, then I think that and starts to move higher. Just because it comes down, it's not time to buy it. But if it comes down and starts moving higher again, then I think that's the signal. That's the rally for the end of the year. So very astute comment from the person that mentioned that. Okay, the last thing I want to show you here before I show you the daily scan is on the charts page of the website. And this was interesting. I just was curious about this. And I went over here under sentiment, the sentiment area down here. And you can see here there's something that says risk on, risk off chart. So I was wondering, are we risk on right now or risk off? So if I click on the daily chart, what this does is shows you the S&P. So you can see the breakout right here. We did not get above the high, although we got to 6,021 over here. That was the previous day's close. The high for today was 60.20, so we got close to that. But there's the breakout on the S&P. So what this chart does, it looks at a risk profile. The first one is a really interesting and important one, is junk bonds versus 20-year treasuries. So 20-year treasuries are typically thought to be very safe investments, whereas junk bonds, on the other hand, are much riskier. So if it is a risk-on scenario, then we should be seeing this moving higher, and that's what it's been doing. Ever since September, you see it pull back here, May through September, and then started moving higher. But look what's happening right now. So it's pulled back below this previous high. So I thought that was interesting. That I don't know if it means anything yet, but it's just something to continue to watch. And if you're a subscriber, you can always go to that chart. I'll show you where it is again in a second. Similar down here, investment grade corporate bonds versus 7 to 10 year. These are shorter term treasuries. This is clearly above the previous highs over here, so that's risk on. And this is high yield corporate bonds versus shorter term treasuries, and that is also clearly above the highs. And then, of course, growth versus value has been coming down, which I never like to see when the market's moving higher. And discretionary versus staples is actually doing really well. It's actually above the previous high. It's pulling back a little bit in the last month, but it's still hanging in there. So that's a positive right there. So nothing concerning yet on this chart, but I just wanted to point this out for those that are interested. You might want to just take a look at it. It's on the charts page on this tab right here. On the left-hand side down where it says sentiment, also the VIX is right there. So this will show you the right here, risk on, risk off chart. There's a longer term one here as well. This is a weekly chart. This shows you the previous recessions. And you can see right now, this is still this is definitely risk on right now. So there's nothing really concerning about this yet, but just something to watch and keep in mind. The other one that I like to look at occasionally is the 50, 200-day analysis. So if we look at the NDX, I like looking at this because there's 100 stocks in the NDX. And what you can see down here is the percentage of stocks above their 20-day moving average is 64%, so 64 out of 100. Above the 50-day is 68, so 68 out of 100 are above the 50-day moving average. And down here is the 200-day, so they're all pretty similar, 67%, so 67 out of 100 are above the 200-day moving average. And usually a reversal occurs when this gets into very extended territory. So you can see right here when it got above 80, basically got to 90 right here above the 20-day moving average. And that was the beginning of a downtrend. The 50 also you want to watch. So right here, it got extended and the 200 got extended right here. So that's this top right here, pulled back and came back and pulled back again and then broke out. So again, nothing too concerning right now. The put call ratios on here, that's very low. That means everyone is bullish. That's usually when markets reverse, but this could stay bullish for a very long time. Could easily stay bullish until January. Bullish percent index is also near highs. So everybody is bullish right now. So another thing to keep an eye on, again, is it's in the sentiment area with a number of other interesting charts. All right, so let's take a look at our daily scan. And not adding anything new today, just because of where we are in the month. I'd like to see what happens Friday, see what happens at the end of the month, and then starting in December, how we start off the week next week before I add anything new. But you can see right here, we have 6 of them still on here. Remember, we were down to 12 at one point. And down below, we have a couple of that were stopped out today. So actually, the sell dates on these were actually today. So VRT and Oracle. This is 11/27 and 11/27 for Oracle. So they were stopped out today. So let's go in reverse order. I'll look at this one first. There's Oracle. Solid red candle, which means it closed at the low. One way to think about that is the only reason the selling stopped is because the market closed. So this one ended big volume, huge volume today. And the long-term MACD is crossing over. The PPO is crossing over, not below 0, but crossing over. And the accumulation distribution line is falling off a cliff right now. So that one doesn't look too good. It's actually fallen below the previous low, which is actually where we had our stop. So out of Oracle with almost a 2% gain. VRT, which was a great performer. VRT right there, steadily come down. It's sitting right on the 21-day, so who knows, it could reverse. But notice the MACD, PPO. I call it a MACD. I covered this yesterday. It actually is the PPO because I like doing it by a percentage, but most people think of a MACD, and it's the same thing basically, especially on a shorter term chart. But it's crossing over too. It is below 0, So all of that's negative. Long terms crossing over, and the accumulation distribution and money flow, short-term money flow, went negative also. And you notice right down here, this is the force indicator. It's not quite below zero, but it's heading there. So all of this is implying that VRT might continue to head lower. So we exited that with almost a 12% gain on that one. These are the ones that stopped out yesterday. Here's what we're still in. I don't think I moved anything. Gilead, I moved the stop up a little bit on this one. So right now we're basically at break even. So we got in at $90.06, and $90 is where it's at. So there's a stop. It moved up today. Healthcare in general, and actually XBI moved had a good day today as well. I'll show you that in a minute. But there's the buy point right there. PPO is starting to turn up. Long-term MACD is looking positive. Accumulation distribution is going up. All of that looks great. And right here, the force indicator just crossed zero. So all of that is very positive. So I moved it up to break even. So we basically can't lose money on that one. Now, if we look at the overall statistics, we are at win-loss ratio of 39%. And a gain loss right now, even if all of these stopped out, if these stopped out, it's almost a 5% loss, but because of the gains we have down here, it's about 11. It will be about 11% gain overall for the whole portfolio. So this is what happens if the market is moving sideways or starts to go down. And if it continues going down on Friday, we might get stopped out of a few more. This is what happens. Your process automatically takes you out of the market as the market starts to go lower. And you don't get back in until it starts to reverse. So that's the key. That's what I'm trying to teach here. Kava, I think, might get stopped out soon. It's sitting right on the line right there. I think it's 139. It was at 141 today. DocuSign actually had been doing really well and had a big red candle today. So that one's going to probably get stopped out, I think, on Friday. The stop is at 80, and it's at 80.38 today. So that's this one here. So that'll be a 12, almost a 13% gain. That likely will get stopped out on Friday. ADMA, still looking good. ADMA is a healthcare biotech. Biotechs did really well today. So that one's looking pretty good. What else? WGS, also healthcare, medical equipment. So this one had been moving up nicely. So the stop is right below the 21. The 21's at 73.34. This one actually looks pretty good though. The candle, it's a hammer, which means it traded down, but then came back at least to the halfway point. So it might actually hang in there. The stop on that one is 72. So we've got a little ways to go before that one gets stopped out. And in fact, if it does come down, so 73.34, so 72 is the stop, 73.34 is where the 21 is. If this continues going sideways, I probably won't do anything. But if it moves up a little bit, and you can see the PPO, MACD is getting ready to cross. Accumulation distribution looks okay. So we'll see. Today's down day was on low volume. So that's okay. So we'll see. If that starts moving up, then we'll move that stop up too. Right now, it is about a 3% loss if it stops out. So that's where we are. I will upload this latest one to the website. For those that have an annual membership, you can get that and actually use the spreadsheet yourself for your own trading if you want to. It's on the portfolios page right here, paper trade worksheet. Just click on that and you can download it. It'll have everything that I'm doing filled in, but you can delete those and start your own if you want to. Just out of curiosity, if you want to see what the weekly market timing strategy looks like, it's still very bullish. So it's not even close to becoming bearish yet. So The entry was back here in October at the low, and it's still going higher. If you look at the daily, this is basically for those that didn't get in way back last October, but would like to start to participate in the long-term trend. I give short-term signals right here, right, points where you potentially could get in. So this is when it pulls back and it closes above the 21-day moving average. That's the reversion to the mean. So pulls back and closes above it with a green bar, by the way. It has to have a green bar. So when that happens, I'll put an arrow in there. You don't really have to try to figure it out yourself. Just look at the chart. If there's an arrow, that means it might be time to start following. So that's where we are. I think that was everything I had for today. Hope that was useful. Enjoy your Thanksgiving. Happy Thanksgiving to everyone. Be careful. Friday, it's going to be very volatile. Either way, it could go down, it could go up. And next week might be a pullback next week, but I think right after that, we're going to start into the Santa rally. Santa rally doesn't really start till December 24th officially, but the month of December usually, the second half of December usually is bullish, and the on this trend model, the indexes we have the Russell 2000 is right on here, so you can see what the chart looks like for the Russell 2000. You can see right there, they're all green candles right now. One thing I mentioned was biotech. If you go to the market bias matrix, and you'll notice down here, biotech is right here, XBI. Here's the XBI. So biotech is starting to move higher. So that's a good sign. Actually just gave a short-term up signal, but it's been moving higher for the last week. So good news for biotech, just beginning to make its run right now. All right, that's it for today. Thanks, everyone. Have a great Thanksgiving, and please like and subscribe to the channel. I would love to get 500 subscribers by the end of November. Don't know if that's possible. I think we're at like 452 or something. But tell all your friends about it. So thanks a lot, and I will talk to you after Thanksgiving on Friday.